Good morning and a warm welcome. Holly Shields here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some key highlights and happenings from yesterday, starting with the US market. Global equities moved toward record highs on Thursday, and US Treasury yields rose as investors discounted weak US economic growth data to retain their focus on strong corporate results and interest rate exceptions amid rising inflation. The MSCI All-World Stock Index was up 0.55%, barely below its all-time high of 749.18 points hit last month. Benchmark US indices closed higher yesterday as well after the latest economic data showed jobless benefits claims dropped to their lowest level since March last year. Meanwhile, the S&P 500 rose 0.98% and the Dow Jones was up as well 0.68%. The Nasdaq Composite gained 1.39% and the small cap Russell 2000 rose 2.02%. The Commerce Department on Thursday said that US GDP grew at an annual rate of 2% in the third quarter, after increasing 6.7% in the previous quarter. The slowdown was due to the outbreak of the Delta variant that hampered the economic activities. And the Labor Department said the number of unemployment benefits claims fell by 10,000 to 281,000 last week, the lowest since March last year. Consumer discretionary and industrial sectors of the S&P ASX 200 index were the top gainers on Thursday. 11 stock sectors stayed in the positive territory. With that said, now it is time for a short break, but stay tuned because we'll be right back with more updates on the UK and Australian markets.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on The Tech Beat, exclusive to Kalkine TV.
Welcome back to the Global Markets Roundup on Kalkine TV. European stocks closed slightly higher on Thursday, buoyed by robust earnings from food and tech stocks, as the European Central Bank kept its massive stimulus taps open and maintained its view that a recent spike in inflation would be temporary. The Pan-European Stoxx 600 closed 0.2% higher. London equities failed to bounce back in the positive terrain as the domestic benchmark index, FTSE 100, oscillated in the red throughout the day. However, the index partly recouped the losses in the terminal trade, tracking the upbeat Wall Street cues. FTSE 100 shed 0.05%. Plus the moderate to high uptick in the share market cap of leader AstraZeneca, Unilever, GlaxoSmithKline, Reckitt Benckiser, Lloyds Banking Group and National Grid failed to counterbalance the index on Thursday. The mid-cap indicator FTSE 250 managed a marginal gain in the closing deals, with the index concluding 0.15% higher. Italian bond yields were set for their biggest daily rise in over a year yesterday after the ECB president, Christine Lagarde, disappointed investors' hopes that she would calm their concerns over surging inflation and rate hikes. Yields on the Italian bonds, one of the biggest beneficiaries of ECB stimulus, extended an early rise and rose above 1% for the first time since late May. Meanwhile, Japanese shares fell on Thursday as disappointing forecasts from tech companies prompted a sell-off. No gains in the heavyweight chip-related companies, limited losses. The Nikkei share average closed 0.96% lower, while the broader topics fell 0.7%. And Shanghai stocks finished at their lowest in more than 2 months on Thursday, led by coal miners as Beijing stepped up efforts to tame coal prices. The blue chip CS1300 index fell 0.7%, while the Shanghai Composite Index lost 1.2% as well. And South Korean shares ended lower on Thursday as well due to a high sell-off by foreign and institutional investors. But the losses were capped as solid earnings boosted chip shares. The benchmark Kospi ended 0.53% down, reversing earlier gains as much as 0.30%. And the Aussie share market may end the week marginally higher, taking cues from a strong tech-led rally in the US, while weak commodity prices may hurt gains in local mining and energy firms. The ASX 200 benchmark snapped a 6-session rally to end 0.3% lower on Thursday. Several other central bank meetings are scheduled next week, that is the RBA on Tuesday, Federal Reserve on Wednesday, and the Bank of England's Monetary Policy Committee on Thursday as well. To the commodities market now, and mayhem has hit the Australian bond market yesterday as fields surged to their highest since the mid-2019 period, and futures swung wildly to place in a hike in interest rates as well as May next year. With all the action in the bond markets, the Australian dollar was largely sidelined at 0.7506 US cents, stuck between the 0.7536 and 0.7479 two-year yield, which was 0.49% in the US and 0.40% in Australia, while the 5-year yield was 1.18% in the US and 1.46% back home. The US dollar led losses as the euro and British pound late and currency traders digested moves in the interest rate hikes and a weaker than expected US economic data. The dollar index lost nearly 0.6% to 93.34, and oil prices fell following a sudden rise in US crude inventories and a surging case of COVID-19. Brent crude was down 0.7% to $84 a barrel, while WTI was down as well to $82.50. Gold prices rose as well. The demand for a safe haven asset was lifted by a softer dollar and data showing the US economy grew at its slowest pace in more than a year. Spot gold rose 0.11% and US gold futures settled up 0.2%. Let's have a look at the newsmakers now, and Macquarie raised its first half of 2022 financial year net profits 107% and flagged plans to raise $1.5 billion from institutional investors. Meanwhile, casino operator Crown Resorts settled $125 million class action in federal court without admission of liability. Atlassian has reported the September quarter revenue up 34% to $614 million. Well, that is a wrap on the global markets roundup, but keep watching Kalkine TV because we have many more market updates lined up for you.